So today I'm going to show you guys one basic setup that I've been using for years and I've made a heap of money on. So what we're talking about is the ascending trend line. So all it is just one line on your chart. Where people get it wrong, they don't understand that when the markets respect time, well then it creates rhythm, and rhythm will give you opportunity. Like I said, this technique I've been using for a long time and I have had a very, very high win rate. I hope you guys enjoy the clip. Leave a comment and let me know how you go. Back test it, do whatever you like with it, but I love this technique. The power of trend lines. In this clip, I'm going to show you how to identify valid trend lines, draw them correctly, use them for breakouts and breakdowns, understand why trend lines fail, measure the move in the pattern and apply the method across all markets and timeframes. So how do we identify a trend line? So when price action comes down and puts in a reversal or a pivot, the next time it comes back down and puts in the second reversal or the pivot, that's where you start to draw your trend line. You draw a line from this pivot low here to this pivot low here. I'll give you a little example. You draw a line from here to here and you just continue that line across your screen. When we get into the TradingView platform, I'll show you how to use those tools. Now, why a trend line will fail, and that's because if you're trading on a 10-minute time frame, if the greater time frame, meaning the hourly or the daily, does not confirm the move, meaning there's a more powerful move on the greater time frame, well then there's a possibility that your trend line could fail. Another reason why it could fail is because, and this is very important, that markets respect time and they create rhythm, and rhythm creates opportunity. So the opportunity that I get from the market's rhythm is that buying opportunity on the third hit of that upsloping trend line, and I like to trade trend lines, and we're talking about an ascending trend line here with a 90-degree angle or a little bit less. So that's where I'm going to put my order, and 90% of the time I'll get a bounce there. The fourth hit is where you start to get the breakdown. If you don't get it on the fourth hit, you'll get it on the fifth or the sixth, but eventually you will get the breakdown. And how you measure the move to the downside when you do get that breakdown, say for example, you've got a $10 move here, right? You're probably going to get somewhere close to a $10 move there when it breaks to the downside. Now, why a lot of technical traders, they fail when they're drawing trend lines? Because they don't understand, and this is what I said earlier, that when the market respects time, then it creates rhythm, and the rhythm creates opportunity. What I mean by that is that the space between the first hit and the second hit, it has to be the same or thereabouts from the second hit to the third hit. And I'll give you an example. We've got a trend line like this. Price action comes down. The second hit here, if the third hit is all the way up here, the probability of that breaking down is a lot greater than that pattern there. So I'll give you another example because this is very, very important to understand. So you've got a trend line like that, price action comes in. Say for example, this time you got second hit there. If the third hit there is this, the move is not the same as the first hit to the second pivot low, the probability of that breaking down increases. Another thing you've got to be very aware of when you're placing this long position here on the third hit is that the market makers, they like to play tricks, and they know that a lot of traders will put their buy orders on that line and they'll put a stop loss a little bit below. So what they'll do, they'll push it down, and you see this all the time. They wick it down. They'll put a little wick down there like that. And what that does, it activates all the stop losses, takes them out of the game. So what you want to do as a trader, and remember this, is try to put your buy orders where the other traders are putting their stop losses. We'll get into stop losses and fake outs. This is called a fake out in other videos. So let's go across to the TradingView platform now, and I'm going to show you some examples using the candlestick charts on their platform, and I'll show you how to use the tools too. So here we are on the TradingView platform. I've got the chart up of Netflix here, and as soon as I looked at this chart, I saw all patterns or trend lines that can be drawn up popping out at me. So first of all, I'm going to show you where the drawing tools are, or the one that you're going to need to draw these trend lines. So if you have a look in the top left-hand corner here, you want to click on this one. That will draw your trend line. And the first one that I see is this one down here. So we've got a pivot low here. So just click on that. and then we just stretch this out here. And as we go all the way up, we can see there's our first trend line. So like I described earlier, 1, 2, 3, and there's your buying opportunity. And look at the move. And if we just go to the left here, I'll just grab that little measuring tool. Look at the move we've had to the upside. So third hit, a 37% move. That's incredible. And what's even more incredible is the amount of trend lines that I can see or patterns to be drawn up on this chart. So let's draw another one. So we've got here, we've got another one here. We've got a pivot low here, pivot low, same thing. 1, 2, 3, and another big move to the upside. We have another one down here that I can see. So 1, 2, 3. So 1, 2, 3, and a move to the upside. I'll just fix that up, that one. My arrows are just a little bit big here. I'll just make it a little bit smaller. There you go. So you got the pivot low there, the pivot low there, and the pivot low there. Now, what's very important about these three trend lines that we can see on the chart here is the spacing between the first pivot, the second pivot, and the third pivot. And then we get the bounce. First pivot, second pivot, and the bounce. See the spacing? And that's very important. And that's what I was saying earlier. So when the market respects time, it creates rhythm, and rhythm creates opportunity. And that's your buy opportunity there, there, and there. Now there's a few more trend lines on this page. We have one here, pivot low, pivot low, pivot low, and a move to the upside. So here we are. I've just come across to the chart of the SPX because I wanted to discuss the breakdown and how we get the measurement when you do get the breakdown. So first of all, you can see here, 1 pivot, 2 pivot, 3, 4, 5, and then we've got the breakdown. So if I just go across to my measuring tool here, well, we'll go across to here. So you can see if you measure the high here, so about there, once it's broken down, you've got pretty much the same move from here. This might be better actually, from here to here. You can see that move there. That's where your breakdown got the bounce. So I don't take an order here. I don't use that as a level. I just use that breakdown measurement if I'm in a short position. So for example, okay, we've got the breakdown because it's hit this trend line 1, 2, 3, 4, 5, 6 times. Eventually it's going to break. You want to know where you can start taking profits because you want to understand that there is going to be a bounce coming at some stage. So anyway, that was a very basic clip on trend lines. I could talk about trend lines for hours, and I will in other clips that I will put out, but I hope you enjoyed that one, and I look forward to making the next clip. Have a good day, guys. Like and subscribe. Entertainment purposes only and not financial advice. Have a good day.